Hi, welcome. Thank you for joining. Thank you. Just give me a second to make sure my audio is working perfectly and my video. Great. Can everyone hear me okay? Give me a thumbs up on the video. I know this is on Zoom. I went ahead and, because I was getting a little feedback, I went ahead and just kind of muted everyone so that um, there won't be any issues right there. Okay, so just to get started, I know you all are on lunch break. Again, thank you again for joining in this group. Thank you, um, Lourdes, for going ahead and setting this up for everyone. Um, I just want to discuss one of our popular carriers, at least for me and my clients that are based out of New York. Um, because of New York being somewhat of a little bit of have little restrictions when it comes to life insurance. There's not a lot of life insurance carriers that tend to um, offer life insurance coverage for people, residents of New York. But however, if I find on a one-on-one session with you all that you may not qualify for this particular carrier that I'm going to go over, I do have access to other carriers based out of New York that I can at least process you through that you will be able to get coverage for. Okay, so again, my name is Courtney Scott. I am a life insurance broker based out of Georgia. I am licensed in multiple U.S. states. So if you have family or other friends that may live outside of New York that also may be looking for coverage, feel free to forward my information to them as you see on the screen. You can either write it down or screenshot it. I'll give everyone a second to do that. Okay. Okay. Ready? All right. Cool. Okay. So this particular carrier um, offers multiple life insurance products. They also offer annuity products for New York residents. One of their products I am going to go over is a term life product, and they offer rather term and whole life or permanent life products. And if you see me looking over here, it's because I'm looking at you all on the screen here, but I'm also looking at my screen that I am sharing on this meeting here. Um, the difference between a term life and whole life, and if you know the difference, just humor me here. The difference between a term life and whole life product is that with the term life, it covers you up to a specified term. So whether that's year to year, 10 years, 20 years, or 30 years, we do have some carriers where they may have a 15-year or 25-year term life. Um, Basically, that it covers you for those amount of years for whatever reason that you want it for. A lot of people choose it because it's a little bit inexpensive compared to whole life products. However, it does not come with what's called a cash value account, which I'll go a little deep into that as we go along in the different products, right? And a lot of people choose it because, like I said, it is a little bit more cheaper. Or if you've developed a certain illness and you may not have much time, but you want to have some type of coverage for your family to give to your family. As long as it's an approvable type of illness, you can get the coverage, right? Um, it does include riders or options that you can add on to your policy at an additional cost. Some of those would include an accelerated benefit rider, which only covers for terminal and chronic illness. And because New York does not cover for critical illness type products, you can also get a children's term rider that covers children up to the age of 25. If you decide you don't want to get an individual policy for them, or they may not be of legal age to get an individual policy, so you can add them onto yours for an additional cost, and it gives them a term policy. And like I said, it covers them to the age of 25. But this particular carrier, I believe you can get up to $25,000 for that child. They also have a disability waiver of premium. So if you become disabled, you can exercise that premium and or that rider, and it'll waive your premiums for the remainder of the policy. And that's just cut and dry, for this particular term life policy. The minimum that you can only get on this policy is $100,000. You can get up to even $1 million for the policy. Okay. Next is their standard whole life product. The minimum on that is $10,000. You can get up to $1 million or more if you need it for this whole life policy. It comes with what I said before, a cash value account. This cash value account is sort of um, like a savings account. So every month that you pay on your premium, a portion of that goes into this account, and it grows according to the S&P 500 index without you actually having to take any sort of risk into the stock market. So if that index goes down or it goes into the negative, it does not affect you, but it affects you in the way where you're able to grow your cash value account with on it, right? Or it grows, it follows it, right? This money in the cash value account can be used for whatever reason. So if you ever heard of the term infinite banking or becoming your own bank, that's kind of like what they're talking about. Let me know if I'm going fast, or if you need me to repeat anything, go ahead and just wave your hand or just type in the chat there. If you need me to repeat anything. I know I'm going a little fast. I know some of you are on your lunch break at this time, so I don't want to take up too much of your time. I want to be able to answer any questions that you may have at this time as well. But with this particular one, the standard whole life policy, it does come out it does include what is called dividend options. Now, if you heard this term relating to the stock market, this is different from the stock market. Dividend, when it comes to a life policy, basically means that it's like overage of your premium payments at the end of the year. So if you ended up paying, if the carrier finds that you ended up paying more each month in your premium, they will take that as a dividend, and you have the option to get paid that dividend in cash, premium, or have it applied to your monthly premium to reduce your premium amount, or you can do it as a paid up addition, so additional money towards your policy, or accumulate an interest. Now, I will say dividends are not guaranteed every year. It's just that if it happens, this is the options that you can choose from for that dividend. Now, again, this also includes benefit riders. It includes a little bit more than the term life policy. You can get a guaranteed insurance option. This basically means that if a life-changing event happens, you get married, you have more children, you adopt, or whatever the case may be, you can add more insurance or more coverage or benefit amount, and you don't have to prove insurability. Okay. And then for whatever reason, you can add a term rider to your policy as well, or you can add a children's term rider. And you can take a policy loan out from the cash value account, and again, you can use it for whatever reason. Of course, if you pass away before paying it back, they'll just deduct it out of the benefit amount to your beneficiary, and pay your beneficiary the rest of the money. So that's with that. Now, the last two products is their universal life product. They have a guaranteed universal life product, and they have an index universal life product. The guaranteed universal life product is leveled. There's no additional death benefit options, and I'll go into the other options on the other product in a minute. You have a 10-year minimum guarantee. So if you pay your premium on time every month for at least the first 10 years, if something happens and you skip a payment or you can't pay anymore, your policy will not lapse for any reason. Okay. They have a surrender charge for the first 10 years, which basically means that if you surrender or turn in your policy within those 10 years, based on the year, you are basically charged a certain percentage for turning in your policy. Okay. And usually some carriers will basically either they'll refund you your premium, but they'll deduct it out of that premiums you paid over the years, right? Some, it may be different. With whole life policies, this particular carrier, it matures at the age of 121. So if you live beyond 121 years old, basically they will just pay you whatever your policy face amount is. Okay. The index universal life. This is where you can kind of pour in each year a little bit more money into your policy if you so choose to. And I usually structure your policy in a way where it prevents what is called a modified endowment contract, so that within that first usually 5 to 7 years, excuse me, sorry about that there, I had to go ahead and pause that there. um, you can pour into it, and basically it allows more money to accumulate into your cash value account. Now after a certain amount of years, you just want to go ahead and just pay normally into your monthly premiums, or if you choose to do it, if you choose to pay on your policy annually, semi-annually, quarterly, it's up to you. But if you were to go beyond those 6 or 7 years, the IRS now looks at it as income, and you can be taxed on it. Okay, and just a note, your cash value account, if you take money from it, it's tax deferred. Your beneficiary receives the benefit face amount when they put in a claim, tax free. That's FYI. So the death benefit options that I mentioned in the other type of product. This particular product, the Index Universal Life one, comes with 3 options. You have the leveled option, which is usually they call it option A. Option B, which allows the beneficiary to receive not only just the face amount of the policy, but they also get whatever is in your cash value account as well. Or you can do option C, where they get the face amount of the policy, plus they get a return of all the premiums you paid over the years. Okay. And if you have a disability waiver, they'll exclude any of that, any additional fees as well, on that. Or if you did a partial surrender of your policy. This also, again, comes with a no lapse guarantee, and the surrender charge period of the first 10 years. The minimum amount to get for this type of policy is $25,000. You can get up to $1 million or more if needed. This particular carrier also offers for New York residents annuity products, which is just like I like to say, it's another vehicle for retirement income. Some people who come into lump sums of money either through winnings or inheritance, they may use an annuity to pay them out over time, if they want to do an immediate type of single premium annuity type of option, or they'll just have it paid out over time. And you will never outlive the annuity. It's there to pay you basically, for the rest of your life. And that's pretty much it with this particular carrier. Did you have anyone have any questions?
The way you would work with them is depending on what their needs are.
Mm-hmm.
Not national, but it may be another carrier, so to speak, that can give them the services they're looking for.
Yeah, so based on that person's needs and qualifications, because again, different carriers have different qualifications.
Right.
So if you have a certain health condition, that may not be approvable by American National, I can at least look and see which of the carriers I am associated with in that offers coverages in New York, because New York laws are very a little strict. So
Yeah.
a lot of insurance carriers, or life insurance carriers rather, tend to not offer coverage in New York, or they may only offer long-term care or disability income products, right? So I can take a look at the ones I'm associated with and say, okay, you may not qualify for this one, but I can get you here, and then we can go according to that. So my initial conversation is just basically getting to find out what is it that you're looking for. If you're not sure how much in a face amount for your policy you want, you can tell me, well, what are you comfortable with paying each month for your policy, and I can determine that from there. Are you a homeowner or a renter, so on? What are your health conditions? And I just want to let you ladies know, if you do decide to go ahead and you want to do a one-on-one, um, if you take any medications, please have them on hand, because I'm going to ask for it and ask for the spelling, because I know some of these medications, the name of them is like weird. So have your medications on hand. And I always ask them in the last 10 years, I want to know, did something happen? Did you have a mini stroke, a stroke? Did you have cancer? Whatever the case may be. Because your information, the carrier runs it according to the Medical Information Bureau. So they're going to see every time you went to the hospital, every time you went to a doctor for whatever reason. And it needs to match what I put on the application.
Right.
Mm-hmm.
Okay.
So I do, just to answer your long-term care question, there is a carrier that offers long-term care products for New York residents.
Okay. You heard that, Miss G? Okay. All right. So the person that's interested in the long-term care can give you a call and you can have a more personal
Yeah,
conversation.
yeah.
Maybe.
Say that last part.
That the person that's looking for long-term care can touch base with you and you guys
Yes,
discuss her needs are.
yes. On the screen there, I have my contact information. If she wants to write it down or screenshot it, feel free to, and then just reach out to me and we can schedule that conversation.
All right. I think that was pretty much it overall. So that,
And if anyone is looking for disability income, as well, we do have the same carrier. We have a carrier that offers that as well. And we also, the American National, if you're looking for an additional resource for retirement, they also offer for New York residents what is called an annuity. An annuity basically just pays you out for the remainder of your life. You will never outlive it. Um, it's,
that's fire, right?
I'm sorry, say it again. Did someone say something? Oh, I thought I heard. Can you all hear me okay? Oh,
Does that expire?
the annuity,
Yeah.
yeah, at the time of your death, or you can have it to where it continues to pay out to a spouse or beneficiary.
Okay.
Yes. And it's basically some people, they'll use their 401k either if it's a 401k through your job, or if you have an individual 401k. Most people who have a individual 401k are usually business owners, small business owners. And basically you can take some of the money in your 401k and you can roll it over into the annuity. And basically you pay like a monthly premium amount, and you can do it either to where it starts to pay you out after a certain amount of years, or depending on the carrier, the product rather, it'll start near 59 and a half years old. Yeah, usually like retirement age, getting close or at retirement age, right? So it starts paying you out. And this is not just for people who want to use it for retirement purposes. You have people who win lump sums of money or they inherit lump sums of money, so they may use it for that purpose, where they'll put a lump sum into the annuity, and because they want it to pay out to them on a monthly or yearly basis. They don't want all the money up front like that, you know. So annuities have different options, and of course, we can always discuss that option as well on a one-on-one basis.
Yeah, the annuity sounds good.
Yeah. Do you have any more
All right.
questions?
Courtney, I want to thank you for your time and thank you so much
Thank you.
for doing this. Again, I'll give out the information if they haven't screenshotted already. So if they have any questions or
Okay.
actually want to, purchase a policy, they'll get a hold of you.
All right. Sounds good. Thank you so much.
Thanks, Courtney.
Thank you. Enjoy the rest of your day, ladies.
Courtney, thank you. It's been very helpful. Thank you.
Thank you. Bye bye.